3, 2, 1.
Check it out.
Of course. Thanks for having me. And yeah, I really when I first discovered the Mentality of Money server, I just thought it was the coolest thing in the world because I'm very much about just kind of everybody getting together and sharing our knowledge. Like that's one of the things that really kind of drives me to keep participating. Is I think financial education is one of the most important things we can do. And as I get into this presentation, I think it will prove that in fact financial education is going to be one of the biggest hurdles for kind of bringing people into the loop and like letting them use these tools, because the more tools that become available to people, that's all great. You can do things with your money that nobody could have dreamed of doing at the like retail level years ago, but with that comes kind of an increase in responsibility. So without further ado, I will start this. I'm going to probably be hopping off and running between windows during the presentation because what I'm going to try to do is actually demonstrate some of this stuff. I'm not sure how long these things usually go, but I assume we probably won't have enough time to, go into detail about everything. So I'm going to do my best to give like an overview. I know we talked about last week on the Twitter call. I know I talked about having a little opportunity for people who wanted to get like $100 to trade on Quenta. I'll try not to show Quenta too much, even though it's like my favorite project. But if you did want to like grab that $150, I have a link at the end of the PowerPoint here, and that also has a little thing where you can tell me what topics you might want me to do in a future class, because this is going to be a very, very broad overview. It takes a lot of time to go into like really, really deep detail about things. So after this overview, if people like the content, I'm happy to come in and do a deep dive on any of these topics or related topics or whatever. I try to spend a lot of time doing research in the space. So here we go. Start the slideshow. All right, and if you do want to interrupt me, feel free. Just speak up. So DeFi Basics is what I'm calling this. DeFi, by the way, is just the concept is you're using smart contracts or these crypto networks in order to build actual applications and tools. So it's like you have Bitcoin or Shiba Inu or Doge, and a lot of those things are just these assets that you can trade, but DeFi is a little deeper than that. It's actually programs that you can run that have rules that create these different products. So this is just a little bit about me. I've been in crypto since 2012, but I lost it all. Been trading stocks since 2014, and full-time DeFi for a couple of years. I usually trade technicals, not too many stocks anymore, except for I love metals and miners. I just kind of have an easier time following these more commodity-like trades than I do the ins and outs of different companies. And I mainly trade options on Robinhood and perpetual futures. And a little bit there about me, just in case you don't know me. So here are the topics we're going to talk about. First, why DeFi? Like, what are we even doing here? Why do I think this is so interesting? Go into a little bit about that because there are some really great kind of rewarding elements to it. I obviously love the space a lot, but it's also very, very risky. So it's kind of like, okay, if you did want to get started in this, why are you doing this and what can you expect? Wallets, this might be really, really basic for some of you who have played around with crypto a little bit. Just what is a wallet? But it is the most important part of getting started. All of this is about kind of holding your own money in your own hands, and you can't do that without a wallet. Bridges, this is how you're going to get between the different chains. I won't go into a deep dive about chains because that's a huge topic, but just generally moving between them so you can get to the different applications you want to use. And then we'll talk about applications. The real basics are swapping. So these are things like Uniswap. That's one most people have heard of. It just lets you take one token and turn it into another one. And it does this all on chain, so you don't have to have an account with any of these shady FTX-like companies. Lending, very, very basic. You deposit something and then you get something out. You can use it to do a lot of cool stuff. Perps, there's my chance to shill my project, but I'll mention a couple other cool projects too, because there's actually a lot happening in the perp space. So if you wanted to get into it, it's derivatives are really, really fascinating. And then Break-a-Brack is just because I can't put all the other strange nerd stuff in here, but if you're kind of enjoying the content and your interest is piqued, we'll list off a couple other cool things that you can do. And I have a couple links where you can look into that. And then bonus, I'm not sure if we'll get around to it, but I do have a link to buy a link toad. We could try doing that if we have time, but we probably won't. But the link's in there. I can't remember. That's Kirkser's project that he's working on right now. So I figured I'd throw it in there, give a little shout out. All right. So why is DeFi? Why are we doing DeFi? The first thing, the money stays in your wallet. So if you are familiar with the FTX drama and all of that, this kind of proves why people have been wanting to do this. Maybe you don't feel safe. Maybe you just think it's cool to hold your own money. I'm a little bit of both. And I just like the idea. I've always been the kind of person who likes gold. I like to have things in my closet. I like to have cash in my hand. And so I like to have my crypto in my own control. I don't like giving it to somebody else and trusting them. And then the risk is, of course, money stays in your wallet, which means you have control of it. If you lose it, that's on you. It's like cash. You can, if you leave cash on your front porch and somebody takes it or it blows away in the wind, that's that. So a very, very important benefit and risk in one. There are a lot of great opportunities still in crypto, not quite like it was in maybe 2020, 2021, but you can make really great yield trying new things. Every once in a while, you'll get free stuff. I mean, I know people who have, made lots and lots of money just trying new products and getting airdrops, which is like where a new project just hands you free money. So sometimes it's profitable to learn, actually. And then you can get lots of different exposure. So if obviously Robinhood's getting pretty good now, and a lot of the major exchanges are getting pretty good so that you can build a lot of types of exposure with ETFs and this type of thing. But generally, derivatives that you would have access to on chain, if you're trying to build, I don't know, anything from a long volatility position to a short volatility position, and you want that to be long ETH volatility, long Bitcoin volatility, whatever you're trying to do, you can build that. So it's incredibly flexible. And as more of these tools are built, you can kind of just, come up with a thesis, and sky's the limit for how you can actually express that. And there's less limitations based on region and regulations. So even though my lawyer probably would not like me telling you that, you can get all of these things are just on the Ethereum network. So you'll see there's some region restriction and stuff like that, but it's actually impossible to stop you from interacting with these things. If it's on chain, you can just go do the transaction. So I trade gold with high leverage. In the United States, it's not too easy with a lot of these platforms to get leveraged gold. Or leveraged gold, you can get 3 times leverage or 2 times leverage. But in a futures product, you can start with $100 and go 10x leverage gold if you wanted to. Not advice there, but it kind of shows the flexibility. And then some of the risks are, of course, exploits and hacks. The way we're going to get around that today is I'm going to recommend a few battle-tested projects, and that would be probably the best way I can recommend to stay away from hacks and exploits, is use things that people have been using for a really long time. The more people who use something and the longer it goes well, the better. You can also read the code yourself, but if you're not a coder, it probably isn't of much use to you. So the best thing to do is to assume that if there's a big pile of money sitting out there, people will try to get to it. And if years go by and they can't get it, it's probably pretty safe. And then most transactions are public. That's one of the biggest downsides. So I'm a big fan of financial privacy. There are tools out there for financial privacy, but in general, you can just kind of go, like, I'll click on Etherscan right here. You can just go look if you want to see Builder 069. There's your there's the wallet and there's everything in it. So it's all very open, and that's both good and bad. So it's got positives and negatives to it. All right, wallets. Here's the super basic. You communicate with one or more networks. So if you've used BTC before, this is what we used to. Oops, sorry. Let's see if I can go back here. So if you've used BTC before, here's what I was going to show. You may have seen something like this. This is what we used to use back in the early days. And this is actually going to generate a private key. It uses randomness, so you don't get the same key every time. That's why I have to kind of do all this. But this is what your key looks like. This is what we used to use back in the day, and this is at the base how everything works. It is really great to kind of learn that this is what you have, because on a fundamental level, you want to understand that you're not actually holding the crypto itself. Like, the crypto exists on the network. You are holding these keys. So it's like a key to your house, except the house is a big building, and that's the network. And then every other wallet is just like seed phrases are a common way to secure a wallet. Every other wallet is just a bundling of different keys that can be generated. You don't really have to know exactly how all this stuff works. All you have to know is that is where you hold your keys to the network, and if you lose them, you are absolutely screwed. So what you're going to want to do, if you ever get a seed phrase, back that up physically, put it in 2 locations. One location burns down, you still have it. Statistically, that's how you avoid losing all of your money, and it's very important. Probably the most important thing you will ever do with your crypto is secure it. So quite important. So you have browser extensions. That's this right here. If you're familiar with MetaMask, this is my MetaMask browser extension. Just kind of filled this so I can give examples here. You have mobile wallets. I will actually give an example of something you can do with a mobile wallet. I mentioned this a little bit. I'm going to go over to Quenta because, of course, why not? Rainbow is a browser wallet, or excuse me, a mobile wallet. But a really interesting thing you can do here, I have somebody else's wallet loaded. This is not mine that's going to show up. There we go. Okay, so this is 4CF40. I thought they'd have a fun little name, but they don't. And we can go over. Oh, did I load the wrong one? Sorry, guys. I loaded the wrong one. Anyway, let's see if I can find another one for you real quick. Because this is kind of too cool to pass up. Here we go. Here's a good one. So if you go on Etherscan and you find somebody interesting you want to pay attention to, you can actually go look at their wallet. So this is the DeFi fund.eth. This guy is an absolute trading animal. And it looks like he's been trading again recently. He just got liquidated on, and when I say animal, I mean this guy is not very successful.
Do you have lists of wallets that are like associated with known players?
Yes, yes, I keep my own list, but you can find when people put their wallets out there, like you can kind of find them. Some people even use their ENS names. So if you see these guys who are like the DeFi Fund.eth, some of these guys actually put it on their Twitter account. So you can just go look at the names on the Twitter accounts, and you can import these wallets. Like if I wanted to actually look up the root wallet here, go over to Etherscan and the DeFi Fund.eth.
Yeah, so that's really what you want, like, is to create like a whole watch list out of these things, eh?
Yeah, yeah, exactly. You can create an entire watch list. You can put them right in Rainbow Wallet, and then you can go look, like I'm showing here at basically. I don't think he has an open position. I was hoping I would find somebody with an open position. I'm not going to spend forever looking, but yeah, you can just go in and look at everything they're doing, everything they've ever done, what they're holding. And yeah, a lot of times you can just find these guys, like they'll post their addresses right on Twitter, and you just look them up, and that's who it is. So it's a very kind of interesting tool, and it also is very, very useful for if you're expecting a very large liquidation event. Like if you hear about in TradFi, guys who will get kind of insider information about from exchanges about where stop losses are or where major liquidation targets are, like that is no longer insider information because it's all just public. So you'll have these events where people are following like a particular guy getting liquidated because you can just see his position on chain. It's very interesting. One of the recent ones was the guy from Curve had borrowed a lot of stable coins against his CRV holdings, and people were expecting his CRV holdings to get liquidated, but it was so big that it would have just incredibly decimated the price of CRV. It didn't end up happening, but that's kind of an interesting little way you can use all of these tools to go and
like build positioning matrices out of like all of the like the major funding players in the exchanges, right?
Yeah, it's
That's a lot of work to put that list together, though, isn't it?
Oh yeah, it takes a ton of work to put it together, and even more work to make it useful once you have a list of people.
Right. Yeah. You can just have all those hashes, but like knowing what to do with the data is like a whole different game. So I can see where the value is in these providers who do that.
Yeah, I would. I spend most of my time looking through this just for fun, without really a plan, because it is so hard to figure out sometimes what to do with the data. But every once in a while, an idea will strike you. And of course, from my perspective, since I am I work on the marketing side of things, like it's part of my job to just know who these guys are and be able to contact them. But aside from that, yeah, you can build trades and build theses based on these and kind of look at things that are happening in real time in the market. And a lot of the major events, like the collapse of Luna, that had on-chain events, the pulling of liquidity that led to everything going to zero. And you can watch that on chain. That all had warning signs on chain, and people were watching it and expecting it to happen. So if you learn a little bit about this stuff, it's a little bit it can be quite the learning curve to step into it. But if you just kind of understand at the very least how it works and how people are getting this information, I think it does a lot to kind of clue you into what people are talking about if you're out there on Twitter reading stuff. So even just browsing Etherscan for a while, I think you start to get a little bit of an idea of it. And then, the very last one on this list is hardware wallets. Hardware wallets usually require you to connect to another wallet. So if I wanted to use DeFi, I would just plug my Trezor into MetaMask. There's a little... Is my... I'm never sure if these pop-ups show up. Is my MetaMask showing up on the screen share?
Yes, it is.
Okay, great. So yeah, if you go in here... There's a little hardware wallet thing. I don't have one plugged in right now, but I do use one because that's the safest way to store a bunch of money. It's, I think, fine if you have like a few $100 sitting on a browser wallet. Do not put hundreds of thousands of dollars on a browser wallet, please. I've seen it turn out very badly for people. Um, uh, well, Trezor's software is open source. So assuming that the software they're publishing is open source is the same stuff that they compile and actually put on the device, then that wouldn't be possible with Trezor. Now you are trusting them, of course, to give you the same software that they publish as open source. Maybe it's not, unless you actually read and compile all of the source for everything yourself. You can never tell. Generally, I think for most users, like it's one of those like ultra paranoid guy things, so it probably doesn't matter. It's not like your average user is going to be threatened by this. Like they're actually, from what I understand, they're actually securing your keys pretty well, and it might even be like a useful service. But me personally, I don't. I use Trezor partially for that reason, and you can see I only put Trezor on the list. So it's probably fine. You know, if you have a ledger, I wouldn't freak out about it. But I prefer Trezor for that reason. Yeah, and Trezor's all open source and generally probably doesn't have a backdoor. I would almost guarantee you that Ledger has a backdoor. Like, there's no such thing as closed source software holding a bunch of money that like the government's not approaching the company telling them to put a backdoor in. So there you go. And in fact, it means they must have a backdoor. Like, even if they're not letting the government in, the capability is there, right? Like, the capability is confirmed to be there. So even if they haven't put in the backdoor, it can be put in at any time. So yeah, that's interesting. You're probably fine, but I use a Trezor. So there you go. Bridges. This is a fun one. Bridges, if you read about hacks, and I love hacks, you're going to read about bridge hacks the most. And a couple of very important points on that. Bridge hacks mostly impact liquidity providers. So if you're just a user that's coming in like, I need to get coins from one place to another, you probably don't have to worry as much about that. There's not like unless like the bridge gets hacked at the exact moment you're bridging, which is very low likelihood, you're probably fine. It's mainly liquidity providers that are having these issues. So if you try to venture into liquidity provision, start worrying about it. If you are just trying to use the bridge, I've never really had an issue, but do be aware that there's like different security levels of bridges. So the security levels, native bridges. Native bridges are your best bet. These are the most secure. And this would be something like the native optimism bridge. Now, I won't get into the nitty-gritty technical details of like how these native bridges work and what makes them different. We could probably spend 5 hours on that. But in general, like if you're going to the optimism chain and there's an optimism bridge, it's going to be your safest bet because it's actually on the on the smart contract level that these things are securing your funds. Whereas some of the fast bridges, some of them are even just centralized, like it's just a company that holds these funds and promises to send them to you. So native bridges are always the most secure. They're often the cheapest because a lot of times they don't even have fees on top, although gas can be pretty high, so it kind of depends where you're coming from and going to. No liquidity constraints, so you can send like infinite amounts of money. If you have the money on Ethereum, you can send infinite amounts over to Optimism as long as you have it. And then the downside is like they're slow. So if you're going to most L2s from Ethereum, it takes like 20 minutes, which isn't terrible. If you're going back the other direction to Ethereum, it takes a week. So something to be aware of there. You probably won't remember all this, so when you're trying to bridge, make sure you know how much time it's going to take if you decide to use the native bridge, and just look it up while you're doing it, because you don't want to get stuck not having your money for a week if you didn't expect that. Fast bridges, a lot of them are perfectly fine. Usually the way they do this is there's a pool of assets on each side. So you'll have, on Optimism, you'll have a bunch of USDC. On Ethereum, you'll have a bunch of USDC. And then when you send to the pool on one, it releases on the pool on another. There's a variety of different ways they do this. Some are more secure than others. But in general, like the really popular ones that have been around for a while are probably functioning fine, and it's okay to use them on a daily basis. As long as you're not providing liquidity, it's pretty low risk. You can go more places using those. So the native bridges are pretty much always just two ways. So you can either go, with the Optimism bridge, it's just from Ethereum to Optimism and back. With fast bridges, sometimes you can go basically to any chain. And then for a user, you would probably want to use a bridge aggregator. And I'll give a little example here of one. This is Bungee. I use Bungee because it's very simple and very fast, and it's good enough. And basically what this does, let's see if I can get an example transaction. I'm not actually going to use it because these take a while, so they're not really a great thing to demonstrate. But yeah, you can see if I want USDC on Polygon and I have Ethereum on Optimism, Bungee will just do it for me. And they don't do this. It's not their service. What they actually do is they go find the best service. So you can see it lists out the different ones. And this is really useful because if you don't really know what the hell this looks like or what these are, like if you don't know what Stargate is, you can just go over to Google and search, is Stargate secure? And, you'll find people giving reviews and all this stuff. This is actually like, I am not a deep expert on every single bridge that I use in here. I just look at kind of what the fastest and cheapest are, and then I'll go search, like, is this one safe? Generally, if people are having good experiences with them, you're only going to be using these things for a few minutes, so you're probably fine. Again, the big risks are usually for liquidity providers because these are people who are exposed to the risks of the bridge for, months or years at a time. So it only takes one failure to completely ruin them, whereas you as a user are only using them for a few minutes at a time. So the risk is much lower. But yeah, Bungee, very good. I do not work for Bungee, but I will recommend the hell out of them, and they're great. They're amazing. Oh, this is kind of a very, very interesting thing. So I don't know about that particular BTC, but like it is possible for assets to get stuck on networks if all the bridges fail. And this is kind of at least one of the dynamics you're seeing going with FTM. The multi-chain situation. Let me just get a little article. Get a little article here. I don't even know which article is the best, so I'm just going to post this Google search for you guys because this is a wild, wild story. I'm going to post it in the class chat. So the issue going on with FTM in particular right now is that multi-chain was like their biggest bridge, and also holding like a ton of assets on the FTM chain, and it got hacked and absolutely drained. And so I don't have like a ton of details about that, but I imagine what's going on is depending on how the BTC got there or off in the first place, it probably can't get back, right? Like you can't move assets to and from, so there's no arbitrage opportunity. And so now you just have this like wrapped Bitcoin, which I don't really know exactly how that particular Bitcoin is backed, whether it's like a wrapped version like WBTC. I did not mention this. I meant to actually put this in the previous slide. But wrapped BTC is actually not like, there's no smart contract going on with wrapped BTC in the sense that it's not like this magic software that knows that you sent it Bitcoin and then issues you Bitcoin on Ethereum. Wrapped BTC is actually held by a company. So they hold the Bitcoin and then they just issue you WBTC. And then when you want to get your BTC back, you go and you ask them. You say, hey, like you have to go KYC, like you have to show them your ID, and you go, hey, I need my Bitcoin back, and it's redeemable that way. Like a lot of assets work this way, like USDC is the wrapped US dollar, and it's either, I think it's Center is technically the company that issues and redeems it. And so there's actually, if you look at what USDC is, it's on all these chains, but USDC is actually backed by bank account deposits. So it's a very, very kind of interesting dynamic going on. That's a whole other rabbit hole why most of these trustless, permissionless DeFi applications are collateralized by Circle's bank deposits. But anyway, yeah, I'm not sure how the Bitcoin on Phantom is collateralized, but that's probably what happened. Like there probably is no arbitrage opportunity, right? It's just you can't get the assets off, and so people are just dumping or trading. There might be some asset that you can get off where people are dumping all of their assets for that one thing that you can bridge off. It's a very kind of interesting dynamic that happens. And I don't use Phantom much, so I can't really tell you the inner workings. I think I've used it once. But yeah, it's a fun story. All right, getting into the, this one, automated market makers. How can I skip automated market makers? All right, this is also a massive topic. So I included a couple links because obviously all of these things are very, very heavy. So if you like any of these topics, a couple of the links I've included are just like good introductions to a little bit of a deeper dive on how AMMs work. But we'll try to give you the most important thing, because everybody here, I'm sure, is very familiar with how a CLOB works. Now, a CLOB sounds confusing, but it's an order book, right? It's central limit order book is what that stands for. And so a CLOB works where you have a market maker or a bunch of users, but usually professional market makers. They go on and they put orders on the books, and you go buy and sell against their orders. And so that's traditionally forever how everything's worked, all the way, all the way back to when these order books were actual physical books and people were writing their orders on paper. That's how central limit order books have worked. And now we have a new thing. The new thing is AMMs. And so how this works is, let's say you want to buy Ethereum with your USDC. Well, there's going to be a big pool of money on Uniswap. That's a big AMM protocol. The pool of money will have 50% USDC and 50% Ethereum. And when you deposit Ethereum, you get USDC out, and it rebalances every time to 50-50. So this creates a little bit of a price impact mechanism, right? Because every time you deposit USDC and get Ethereum out, you have a little more USDC and a little more Ethereum. And so that means the price of Ethereum, it's less Ethereum to equal more USDC. The price of Ethereum is going up, right? So it creates this actual price impact mechanism similar to how you would have orders disappearing on an order book as they're filled, except it happens smoothly. And then the price impact is according to some kind of algorithm, some kind of formula. And posted a link about that. We won't really go into too many of the specific formulas, but there is a link about that in the second section. And so the most common one you're going to come into contact with is something like Uniswap v3. Uniswap v3 is an interesting case because it's not just this smooth, like you deposit money in and get money out and the price kind of changes smoothly thing. Uniswap v3 actually lets you set like a range of liquidity. So let's say you only wanted to buy and sell Bitcoin, buy and sell Ethereum and USDC if the price was between 1800 and 1900. Well, you could go set that range, and then if the price goes above 1900, you would have sold all of your Ethereum, so you would just have USDC, and if the price starts going back into range, it starts swapping until you get below, and then you only have Ethereum. So interesting little thing you can do with that, by the way, is like that creates like a limit order situation where as an LP you can do limit orders by setting a very, very tight range and just waiting for the market to fill it, and you earn fees instead of paying them. So it's an interesting way to do that. That's a little bit complicated, so if you do want to get into a deep dive of that, this first blog that I listed, that describes kind of the difference between AMMs and order books, so you can kind of understand generally what's going on. The second link talks about the different types of AMMs. So you have these ones that are meant to do price discovery. Those are like Uniswap. You have ones that are more meant to handle assets that are always supposed to be the same, like stablecoins. That's something like Curve. And those are kind of the two big ones, and then there's a few different ways to do it. So this second blog goes into great detail about all of the different types and the formulas, but we will not waste time on that now because it is incredible nerd stuff. So what you should know as a user before you do all your deep dives, the thing you need to know is that should usually use an aggregator. And here's why. Because aggregators are able to pull the best price. So if somebody has Ethereum for sale for 1860 over here and somebody has it for sale for 1855 over there, you want to go over and buy it for 1855, of course. And you want to keep buying it until the price is at least, until the price comes to the other exchanges, right? So these aggregators will give you your best price, and they'll actually pull liquidity from different sources. So if there's somebody who only has like a very, very small fraction of Ethereum available for 1855, that's fine. It'll buy that small fraction and then go elsewhere for the best price. So they're very, very useful. They're very easy to use. And if all of this stuff is confusing as hell to you, that is fine. Just start with the aggregator. They'll do a great job. And so I will demonstrate how to use an aggregator right now. And I actually have a really practical reason for using Quenta, which we just use 1inch, by the way. So it's the exact same thing. 1inch and Quenta Exchange are literally the exact same thing. But I am using Quenta right now because you'll run into geo restriction out there. So they'll like block you by IP address. And we don't do that at Quenta. So I actually, because I have my VPN off, I couldn't go over to 1inch to show you guys how it works. But here we go. We're going to need a little stable coin here. I'm going to get some SUSD. And I just want about $100 worth. Cool. Very easy. You just swap. They all look the same. So this is Quenta, but if you go over to Uniswap, you go over to 1inch, like it all looks like this, where you just select the two assets. If you want to flip them and swap back, you just hit the little button. Every single one of them has the exact same interface. It is like a tried and true, this is how you do it. So you learn one, you learn them all. It's not too intimidating. And you can see there's like a whole bunch of different assets. So you don't really have to worry about it. If you want to go into Chainlink, you could do that as well. If you want to start with USDC, you can do that as well. should use the search function. If you use it as stuff, it's pretty simple, but if you haven't, that should have stopped you from being scared, because it's actually a very, very simple interface. It's 2 boxes and a little selector, and it gives you all your information there. So we now actually have, I don't think it's going to show it in my wallet. No, I would have to import it. I'm not going to do that, but I can see it on the dashboard here. I have $96 in USD, and there's like a million different dashboards that'll show you this because it's all just on chain. In the you can see it in the block explorers too, like that Etherscan link that we showed. So that is actually a demo of how you use an aggregator. And then the next thing we're going to talk about is lending. Lending is a really underrated tool, I think. It's the basis for all leverage. So, whether that's shorting, whether that's using a leverage position of some kind, even forming these like complex debt-related assets or whatever that we'll talk about later. Like it's all basically a form of lending. So this is kind of what sparks everything that you can do in the derivative space. But the very, very simplest way to do it is just to deposit some collateral, like depositing Ethereum or USDC, and then you can borrow something else against it. The reason you might do this, so let's say you have a really, really big bag of Ethereum or Chainlink, and you don't want to get rid of your exposure, but you want to buy a new couch, and you don't really want to put it on your credit card because your credit card is like 25% APY. This is actually like a real scenario for me. You can pay probably a much smaller rate for borrowing against assets that you already have, and you don't have to sell them. So you keep your exposure. You can borrow money and use it any way you want. It's tax advantageous versus selling because in a lot of jurisdictions you're going to have to pay capital gains tax if you sell, whereas you don't if you borrow. Of course, look it up for your jurisdiction. Talk to a tax attorney or an accountant or somebody, because I can't really say for every jurisdiction, and I'm definitely not an accountant. But that is something that people do. And then the kind of risks there is you can have an unpredictable APY. So with my buying a couch example I gave, maybe it looks really, really good because it's only a 4% fee to borrow, and 4% is really great compared with my 25% credit card. But maybe it goes up to 15, 20, and this can be very important, not just if you're borrowing for the purposes of spending, but if you're borrowing to leverage, then all of a sudden your leverage gets very expensive too. So you got to watch those APYs, watch the interest that you're paying, of course, and then risk of liquidation. If your Ethereum goes down, you can be liquidated, and then you of course get to keep everything that you borrowed. You don't have to pay it back, but your Ethereum's all gone. So it kind of ruins the point of not selling the Ethereum. So here's like kind of how you can use it. We'll actually go over and do this. So you can collateralize. You can use collateralized lending to leverage your long by, let's say, depositing Ethereum, borrowing USDC, and then selling USDC for Ethereum. And so this is essentially like you owe USDC, but you have more Ethereum. And if the Ethereum goes up, you can sell the Ethereum, you can keep the extra money and pay back your USDC debt. But if it goes down, you have to find money elsewhere in order to pay back your debt. So that's kind of how the leverage works, and you can build a position like that. You can also use it to short by just going the other way: deposit USDC, borrow ETH, and then sell ETH for USDC. And the real secret there is that a long position and a short position are actually the same. It's just flipping the pair, right? So the first example, longing ETH, is the same as shorting USDC over ETH. That's a fun concept, but if you're well versed in finance, a lot of you guys probably understand this implicitly. If you're kind of new to finance, that's a really great concept to get down. That like long and short are kind of the same thing. You're just flipping the pair, right? It's all relative. And then you can loop this for exposure. So if you want to do, you know, a million X leverage, I don't know exactly how high you can even get with these tools. You can't get the highest leverage possible, but you can get pretty high leverage by just, you know, redepositing the assets that you have sold and then borrowing more against it, and it increases your risk. But you can create. I know some people have created these bots that do like perfect 3x leverage, and you can do stuff like that. I've used this actually for a very practical reason. I use this for longing USDC. I think I came on one of the weekly Twitter calls and described what I was doing longing USDC, because USDC went down into like the 80 cent range and then came back up to $1. And so, you know, 20% is pretty good, but what's better than 20%? Being able to highly leverage your way back up. I think I only caught actually 5% of the move, but I did it on like 4x leverage. And so the reason I did this on a lending market is because all the perpetuals markets were either really, really hard to get into, or they didn't, or the funding was so crazy that I would have been liquidated in like minutes by using them. So that was like a really easy example of some time that I actually used this in a practical sense, because you just didn't have the pair available. I'll show you what it looks like here before we move on. Let's see, there's quite a few assets here. I have SUSD. Oh, here we go. Always make sure you're on the wrong or the right network. If everything looks wrong, you might be on the wrong network. That is the really confusing thing about having all these networks. So I can just deposit all of my SUSD in here. First one is an approval transaction that just lets the wallet or lets the application, the smart contract under the application, it just lets it spend my money. So contracts can't just go around spending anything they want. You have to actually explicitly approve it. It's just a security feature. And then now I can deposit my SUSD. And so you can see one of the reasons people might do this, other than borrowing, if you're like, I don't really have any reason to borrow, but if you're sitting on cash in your crypto wallet and you're not doing anything with it, you can make 2.5% on this. So it's not a ton, but it's much better than zero if you have money sitting around. And then I can just borrow anything I want here. I don't think I'm actually going to borrow because I need the SUSD for my next example, so I'll just withdraw it. But you could hypothetically borrow, it lets you borrow up to 80%. So if I wanted to build my short DAI position, maybe I think DAI, that's another stable coin. It's supposed to be $1, but let's say I think it's going to zero. I can do this by getting myself SUSD, depositing that, and then borrow the DAI, and then you would sell it, and that creates your short position. So if it goes to zero, right, if I borrow a bunch of DAI and it goes to zero, then I don't owe anything. So that's how it creates a short. I just get to get my collateral for free. Go ahead and withdraw that. Yeah, the lending markets, very simple interface, but actually underrated in terms of what you could do with them. They have saved my ass quite a few times. And in fact, my most successful trade of all time was done not on Aave, because this was back when gas was like $1 million to trade on Ethereum, and gas on Aave was actually slightly higher than gas on Compound. But Compound is just like the exact same concept. They just had cheaper gas. So, you know, save $50 on gas there, but I just went really long Ethereum in 2020 using Compound, and that was That was like my best trade ever. That was before a lot of these applications were built, so this was the best we had. It's one of those 5 miles uphill in the snow both ways scenarios. This was the best leverage we had back then. God dang it, we used it. All right.
I'm a long way.
Yeah. Do you remember doing that? Were you like a degen, getting in on your getting your leverage on like Aave and Compound?
Yeah,
and
no,
like,
for sure.
It was, the problem was though, it was like $200 for a transaction for a while. So when it came time to take your profit, it was like, okay, pay your $200 to get your collateral out, and if you only have, you know, $150 in profit, it's not very good. It's not good. And thank God that doesn't exist anymore. You don't have to worry about that. Yeah, almost. We'll see. All right. To the meat of the situation here. Perps, pure uncut delta. Now there are a lot of different types of derivatives. We can get very deep into derivatives, but perps are the simplest ones. These are what most people want to use. So this is like probably one of your most useful tools on chain, and these are kind of where the cutting edge of product is right now. So usually the way it works is a user will deposit stablecoins. This is very similar to if you've been on a regular exchange, you deposit your USD. Same concept, you deposit your USD in there, and then you can trade. And they can be either CLOB based, so CLOB, that's your order book. Old school DYDX does this, where they actually, like, every order that you take on DYDX, there's a guy on the other side of it. So that's what an order book means. Or an AMM, and the way an AMM works is, of course, you put like a bunch of collateral in one spot. It doesn't really matter what the collateral is for some of these models. Like GMX uses the underlying, and they use this because, let's say you give people a lot of leverage on Ethereum and then Ethereum goes up. The guys backing the exchange, your liquidity providers, they're going to lose a lot of money if they don't hedge somehow. So what they do is they hold a bunch of Ethereum in the pool, so that if traders going long Ethereum profit, the liquidity providers are also profiting. They're fully hedged and they're just covering the fees. And then Quenta uses a little bit of a different mechanism. And with a synthetic asset model, which is actually what the next version of GMX is moving to, so this is probably going to become more popular. But with the synthetic asset model, you can just put any collateral in the pool, right? It doesn't really matter as long as it's liquid. And the idea is the liquidity providers who are backing the exchange put a bunch of money there so that they can pay out traders who win, and then they can just kind of offer service by using an Oracle feed. So it's a kind of fun math experiment, but there is like something backing all of this. If you're like, where's the profit coming from when a trader wins? It's this pool of collateral, and then you have to have some way to ensure that, you know, the collateral can be sold off or debt's going to be covered somehow. So you'll use a variety of mechanisms to keep price parity with spot, because there is no spot happening with a lot of the exchanges. So like when you buy 10x Bitcoin on Quenta, you're not actually buying Bitcoin. So what we do is we go to Chainlink and Pyth, and we ask them what's the price of Bitcoin versus USD, and we use that kind of for the rules of the exchange. And then if people buy too much Ethereum or too much Bitcoin or whatever, and we're seeing like a huge imbalance, you get charged a funding fee, which is basically like it's basically like an interest rate, right? A funding rate or a borrowing rate is the same as an interest rate, but funding rates tend to be paid every hour. So they're paid very, very frequently. And it just goes from, in this case with Quenta, if it's a positive funding rate, it means longs are paying shorts. And that helps incentivize an equal number of longs and shorts. There's like a bunch of different mechanisms, and they can get fairly complicated with how this happens. But the real thing you want to take out of this is that generally every perps exchange is going to have a mechanism that makes their perps product the same as your spot price. So if Chainlink is $7, Chainlink perp should not be $20. It should be 7, more or less. And if you wanted to do a deep dive into exactly how they make sure that happens, that is a great topic. But that's really what you need to understand, is that there's no underlying, but it will be the same price. And then there's a few popular ones. I can't go to DYDX right now because DYDX is going to lock me out for being an American. But we'll check out Gains Trade just to kind of show you what these things look like. This is a pretty typical one. They have one-click trading. That's a pretty cool feature. We definitely need that. So you don't have to do all these approvals that I've been doing. They get rid of that. And you can see there's like a lot of assets because they're using oracles. So essentially, if you can get a price feed, you can get an asset listed, and that makes you able to scale these things like massively and quickly. And you don't necessarily just need to trade crypto on them, which is what's really cool. Like they have gold here. They actually used to have stocks on G-Trade. Of course, they don't have the price feeds because they're closed. They used to have stocks. They took those away, I'm pretty sure, because of regulatory pressure. But hypothetically, like you can even do, they used to have Tesla and Apple and all these things. You can even do stuff like that. So there's really no limit to what you can do as far as a price feed for these Oracle-based systems. And I'll take a trade right now, just because. Why not? What's a little live trading among friends, right? And that way you can kind of see how everything works. I'll obviously be showing it on Quenta. Most exchanges are going to work pretty much the same. There's a few differences between them, but most of them will require that you come with a little bit of margin. Some of them will use different coins, so you have to make sure you have the right kind of collateral. That's pretty much the biggest thing you need to do just to get started, is make sure you have the right kind of collateral in your wallet and it's on the right network. Once you can do that, then I'm going to take a 5x long right now. Not financial advice. I'm just doing this to show you what it looks like. It looks like a decent trade right now, but I didn't really do any.
Yeah, awesome. Stand it up.
Yep. Oh, I didn't create a smart wallet right now. This is our special feature. I won't tell you what smart wallet is right now, but you can read about it. We'll just get going so we can.
Is that the one that executes your orders for you in the worst possible order to maximize fees for the other side?
Yes, that is exactly what we do. No, that's the the idea of the smart wallet is that normally interacting with these contracts, you would have to do one of these approval transactions every single time you wanted to, like for every single action, right? So you have to deposit in the contract. There's a transaction. You want to take a long. There's an action. You want to set a take profit order. There's an action. So this just wraps it all up so that when you set all this stuff, you just do one transaction and we have a contract execute everything for you all at once. So it cuts down the number of clicks you have to do by like a third. There's some other cool things you can wrap into it, like delegation. So like if you wanted, let's say if you had a Trezor wallet and you wanted to keep all your funds on the Trezor, but it's a hassle to plug in the Trezor every time you want to trade, you can delegate certain functions to another wallet so that you can actually trade with your hot wallet, but if somebody gets access to that hot wallet, right, all they can do is go do the trading functions. They can't actually withdraw money. So that would, most hackers are not going to be interested in just placing trades on your behalf. They actually want to steal the money. All right. Yeah, yeah, you can do. So I'll be honest, I'm not 100% sure how the smart wallet impacts fees. Marco's here. Marco's my buddy. Marco, do you know if the smart wallet here actually reduces your fees? I think it's probably approximately the same. To be honest.
We're not. Unfortunately, no reduction in fees here. Not yet.
Yeah, yeah. I think in this case it's pretty much the same. But you can do interesting stuff by bundling. Like one of the big costs here, if you look, the base fee here is an execution fee. So that execution fee actually goes to cover gas. If you want to deep dive into how Quenta works, this is probably better opportunities. But the TLDR is it actually takes, in order to place an order, there are actually two transactions that happen behind the scenes just to make that order happen. So this execution fee is paid to the bots that are executing your order behind the scenes. And 152, although it's pretty low compared with like the 200 I was talking about from back when DeFi summer was was a big deal. Man, like I paid an insane amount in gas. I shudder looking at it nowadays. But yeah, this 152, you can, part of it is actually going and getting the Oracle price. So you actually submit the price with your order, or the bot that executes your order has to go get the Oracle price and then submit it, and that's actually very gas intensive. So that's why it's kind of expensive. Like 152 is pretty expensive for an L2. It could just be pennies. But one of the things that you would need to do then is bundle those gas requests together. And so that's kind of one way that, yeah, the underlying infrastructure can be improved by bundling transactions. And a lot of times it's not just like bundling a single transaction, or I mean a single user's transactions all at once. A lot of times it's like bundling redundant data that's being fed from multiple users. And that kind of thing scales. So like if you're bundling and multiple users are sharing the same Pyth Oracle price, that's great, and it scales as you get more users. So if you have 2 people using it, it's a small reduction in fees. If you have 1,000 people using it, it's a huge reduction in fees. Only one person has to pay it for 1,000 people. So yeah, there's like some cool stuff like that you can do, and that's actually kind of part of how roll-up L2s work. By just like bundling a bunch of transactions together and then settling it all at once. But that is also probably a massive topic. But yeah, these there are definitely ways that people are getting fees down like that. Unfortunately, it's not a feature of the Quenta Smart Wallet. I wish that would be pretty cool. But yeah, I'll let that trade ride. You can see I've got a cool 0.5%, 0.07% going now. So I think I'd probably be at a loss after fees. I'm just going to let that go. We'll see what happens. Wish me luck on that, guys. That's a very risky trade. Don't do stuff like that. And no, I did not set a stop loss. I absolutely did not set a stop loss. Yeah. You want to risk? You want a course on risk? That's a different guy. I don't do the course on risk. But yeah, we'll let that ride. So that's your basic, and of course we have plenty of assets too. But yeah, a lot of different perps platforms are going to have just like a ton of assets. Several of them will have TradFi assets. So that's really one of the big things that I use it for. Is I am a big sucker for trading silver. It's paused right now. Of course, it's probably not going to load the chart for me. Oh, there we go. How does this silver chart look, guys? Anybody want to jump in with a prediction here? This is probably, I hate the charts on these kind of small screens, but it's actually looking pretty good.
It's looking pretty good. It's going up and to the right.
It is, in fact, going up and to the right with no sign of breaking the trend. Yeah, that's what we want. Anyway, Bric-a-brac. So this is the section I put in just so we could talk about a couple other cool things that are going on in DeFi that maybe in a future class, if you guys think this topic is pretty cool. I didn't want to start by just like diving really, really deep into it because I was like, I know I talked with Queen in the past, and I know she's not really super familiar with crypto. Some of you guys I know are power users already. So I figured we just kind of talk about the very, very basics and provide some resources you might need to get started. But if you ever want to do a super, super deep dive and find like the absolute coolest stuff to nerd out on, these are kind of where you would want to start. So vaults is kind of a catch-all term for just a place where you deposit money, and you get money out. Ideally, you get yield. You can lose it all. But what's happening under the scenes or behind the scenes? One of the more popular types of vaults are like options writing strategies. So you see sometimes ETFs do stuff like this, where I know there's a 20-year treasury where, or it's like a TLT ETF where it's the 20-year treasury and then you're writing calls against the 20-year treasury, and that's just kind of all bundled up in a single ETF. So vaults can do interesting stuff like that. Tokenized strategies, similar to vaults, except tokenized strategies, instead of you depositing your money and it stays there, you get a little token back, and you can actually buy and sell that. So these are kind of creating some interesting things like you can buy and sell a 3 times leveraged token, which is very similar to a 3 times leveraged ETF, and contracts rebalance it. And so to give you an example of kind of what cool stuff they're doing with these ideas here, I won't connect my wallet. I don't need any of these, but you have, I swear there was a good one that was like a combo gold Ethereum one. Yes, the Ethereum Gold Index. Here we go. So this is an interesting one that is both Ethereum and gold. And the weightings are optimized. I'm sure you can find details on exactly how they rebalance. So it's not just, somebody deposits $100 of Ethereum and $100 of some gold pegged asset. It looks like they're using Pax Gold, which is actually backed. It's one of those wrapped assets we talked about. It's here we go. Looking for the efficient frontier. So it's not a perfect. It's not just like this constant amount of Ethereum and gold in there. It actually rebalances, similar to how like a managed ETF might be rebalanced. So you can do cool stuff like that. And so, if you wanted to say, come up with an index that was Ethereum, Bitcoin, and Chainlink because you just wanted exposure to majors and you wanted automatic rebalancing to these majors because you thought, this DeFi stuff was all pretty cool, but you didn't want to go build your own portfolio and manage it yourself because it's a lot of work. You can use something like that to do it. I'm not sure of any ETH, BTC link pools, but I'm sure there's a lot of weird stuff out there if you wanted to look around for it. And then here's the wildest. Power perpetuals. Here we go. Open Squeeth. Now this is some weird math stuff. Squeeth is, much like it sounds, Ethereum squared. So this kind of gives you an idea. I was talking about the flexibility of exposure. Talk about flexible exposure here. You can actually buy squared Ethereum. And so you can see the effect of it being squared is that it's more responsive to volatility in both directions. So if you get a giant volatility spike, you can make a little bit more money. Of course, if you get a giant volatility spike down, you'll lose more money, volatility being a double-edged sword. But the kind of useful thing about long Squeeth is it plays a little bit more like an option. So if you're trying to play volatility, You can use that instead of options. Much like an option, there's no liquidation risk, but it's also perpetual. So you pay a funding rate for a long squeeze, so you are paying something. There's a million different types of power perps now, I think, but they're all using something very similar to Squeeth. I think Squeeth was kind of the OG. But yeah, so interesting ways to get options like exposure with no expiration date and no liquidation risk. It's like a perpetual option, so it's kind of wild. Squeeth is something I don't trade very often, but this is something I nerded out on for quite a while. It's a good time, just knowing that something like this exists. And the practical use of it is actually if you are doing something like an ETH USDC liquidity pool, if you're trying to get fee yield from that, you're providing that. What you want to do when you're providing liquidity is collect fees and have the price of everything stay the same. You can experience losses if the prices move too much while you're providing liquidity. So this is a hedge for that. That's how some people use it. But it's also just cool. If you like derivatives, it's cool that they're doing weird stuff like that. Because you can kind of just take, if you have a price on an asset and you come up with some weird math to back it, and then somebody's willing to provide liquidity on that, you can create an asset out of anything. Basically, there are no limits to what you can do, and Squeeth is kind of the first example I saw of that in practice. So pretty cool stuff. Bonus round. We haven't taken too long. Let's go buy a link toad. Actually, I think you have to do this on ETH L1, so maybe I don't have the assets to buy a link toad. But we'll go look at link toads. This is Kirk's project. And so there's the link in there. And this is the other thing you can do. Of course, the point of putting this in here is that if you learn these kind of basics, if you're a derivatives nerd like me, you can of course get into derivatives. But there's all kinds of other little stuff going on chain, like these cool little toad guys. A lot of times NFTs will be used as like ways to get into clubs or, either online clubs or sometimes even physical in-person entry and stuff like that. I'm not really too into NFTs, but a lot of people are. So if you wanted to get into that, all of the basics like starting a wallet and all of that stuff, it'll all get you into NFTs just as easily as it'll get you into Squeeth or weird stuff like that. And I used to play Gods Unchained, which is it's like Hearthstone or Magic the Gathering, but the cards are all in your Ethereum wallet. So that's kind of an interesting little use case for this stuff. So another little example of the rabbit holes you can go down and, support your fellow mentality of money server regular. I'll probably grab some of these later. Honestly, they're kind of fun. But I don't think I have money in that wallet, so we'll move on to the quiz now.
Okay, so real quick, the ones that are new to our class. So the quiz, you can't answer verbally because, some of our members just aren't there, comfortable speaking. So we try to make it fair game. So the quiz, you have to answer via typing in the message section. So if you haven't seen it, to the right, you see the little message icon. If you have the screen open and look to the right, you see the little message icon, and that is a chat just for this class. Only us in here can see it. So when he asks the question, you do have to type it in there, no verbally answering. And then the first one to get the correct answer gets the point for the quiz.
All right.
Okay. Sorry, just wanted to cover.
Perfect. That's all right. That is great. Marco says he's giving away a Quenta to somebody who answers the question right. Marco has Quenta; he can do that. So, thank you, Marco, for giving away free money to people. That's what we're trying to do.
That's what I came
You're
for.
awesome, Marco.
Yeah. Marco, I told Marco about this, and he was like, "Wait a minute, bro, can we give stuff away?" It's like, yeah, I don't think anybody would say no. Like, what kind of question is that? Can you give stuff away? Here we go. I did link the quiz, so if you guys want to actually go take it, you can do that. All right. It's not intended for minors under 16. So if any of you are under 16, you must leave. You must leave now. All right, question 1.
Oh, there's a link for the. Oh, okay. Sorry. Go ahead.
There is. We can do it. We can do it in text too. But if you did want to go over it, if you did want to do it yourself, you can go ahead and do that. And there is actually. Yeah, we'll just go into the quiz. But yeah, I put a little link. I just made one just in case people want to go look at any of this material. I know like the material itself can be kind of dense, and there's a lot of links to like if you. I said a lot during this. Hey, if you want to know more, go follow these links. So I figured the best thing to do was provide all the material. It can be a big topic to get started with. So the best place to back up a seed phrase. I did say this one. I'll let people. It looks like Danglewood got it. We will try this. This is I threw you an easy one. I threw you an easy one at first. Oh, it's not going to give me the answers here. I thought it would tell me after I answered the question correctly, but it doesn't until you submit it. But I know that's the right answer. So great. All right. Where does the AMM's liquidity come from? All right. C is correct. There are pools where you deposit 2 or more assets. Where LPs, yes, Holly Volley, deposit 2 or more assets. It can be more. If you've heard of the Try Crypto pool, this is something with 3 different stablecoins all in a pool. And if you go back and click on those links that I put in the presentation, you can see all about that. They will start getting a little harder now. All right, what type of bridge has the lowest risk for an individual user? This one's actually not too hard, but it's important. People saying centralized bridge. Actually, this is a trick question. I made 2 of these the correct answer, and one of them was centralized bridge. And I will tell you exactly why I did this. Because even though me as like a DeFi native sees centralized bridges as like, oh my God, terrible. This is also things like, the USDC bridge. It's centralized, right? They could freeze your assets, but in practice, have not seen a lot of these go down yet. So in general, like these centralized bridges have actually in practice proven to be kind of safe. So even though I would prefer a native bridge, I decided that if people said centralized very seriously, they would have a great point because these like the USDC bridge has been proven to be safe so far. So it really, in that case, it depends what company you're dealing with. You have to know that there are companies doing some of this stuff, and it really helps to know what you're doing.
Okay, Bert, you gotta help me out because some are typing the messages, some are putting the letters, and I can't see both screens at once on my phone. So let me know who gets the point. Who got this point?
Okay, let's see. The first one that I saw was... Oh, I'm going to give it to Danglewood because he said centralized bridge, but Snay Trades also kind of got it. But yeah, let's not type letters, guys, so that Queen can see the answer. Type the full thing. And no looking ahead.
No. They can type the letters too. They can type the letters or they can type the thing. Either way, I can't see both screens, so you're gonna have to let me know who gets it first.
All right, I was kidding about no looking ahead, but try to avert your eyes.
Oh.
There's no real way to not look ahead. It's all there. So here's a complex one. This is where it gets hard. Describe how to use Aave to take a short position on the Link ETH pair. Marco, if you want to give something away for a winner here, this would be the one. This is a hell of a one. Dangle's trying. I'm not accepting that answer though, Dangle. I'll tell you why. I think Holly's got it. I see him typing. Ooh, okay, Danglewood's second answer gets pretty much the closest. Holly, you are getting there, but you forgot that we're shorting the Link ETH pair and not the Link USDC pair. I'm gonna give it. I'm gonna say 50-50. Dangle and Holly both half got there. Dangle didn't specifically say that you have to sell. Well, he did say it. He said it. All right. Dangle kind of got it on the second try. Sell Link over ETH, I feel like isn't quite as clear as selling Link for ETH, like Holly said, but that's basically correct. So what you're going to do is you're going to put ETH, you're going to deposit. It's actually not staking technically. It is supplying is the way they say it. So you supply your ETH, you borrow Link, and then you sell your Link for ETH, and then you are effectively short Link over ETH. So that is how you would do that. All right. Which type of spot AMM could be used to place an on-chain limit order by setting up an LP position? All right. It looks like we got the first correct answer already. Snay, yes, you can do it with C. I respect the answer D because you do technically have to pull your liquidity after doing this. Otherwise, you can just get it sold back the same direction. But C is technically the right answer. You can, in fact, do this. All right. What type of collateral from liquidity providers is needed for a perps exchange offering synthetic exposure? Which type of collateral? Snay is killing it over here. It's A, doesn't matter. As long as it's liquid. Any liquid collateral will do. I tried to trick everybody on this one by being a little flippant with it doesn't matter. But it is true. As long as the collateral is liquid, it's all debt based, so you just need to make sure that there's liquid collateral and you can issue debt against it, and that's fine. The big issue comes when you need to redeem that collateral to pay out your traders. So technically, any liquid collateral is fine. Anything you want. Number 7, last one. If you wanted to build an index fund that held ETH, WBTC, and Link in 3 equal parts, automatically rebalancing each time one of the assets goes greater than 2% from target, which would be the best choice? I'm going to say this, since there are a few different answers here. I think Snake got it again, but I would allow you to make a case for why you think a vault is the best, because he could do this with a vault. The thing is, there's no real advantage over a vault. It is possible to do it with a vault, but there's no real advantage. And a tokenized asset, like you can just trade and hold in your wallet and send to different wallets much easier than a vault position. So even though it's possible, synthetic asset, you could do it, but the problem you end up with synthetic assets is that you need somebody to provide liquidity, and it's much easier and cheaper instead of finding somebody to provide liquidity for this. It's much cheaper and easier to just put the underlying asset in there. So if you have assets that are all on the chain, you're good to just put them in a tokenized strategy. Just wrap it all up, and that's like the cheapest way to do it. You could also build a custom bot, but feeding it your private key is very risky. So they're technically all the right answer, but one is the best. Anyway, that completes the 7-question quiz.
That was an amazing class. I appreciate you so much. I know a lot of us are lost. I'm glad we record these classes. But this is our very first crypto class, so I'm super excited. It's, a big step for the server. Knowledge is power. So anyway, I love what you said in the beginning, talking about, building on your knowledge, but with more knowledge comes more responsibility. And I will snitch y'all out to Ronnie if y'all don't have good risk management. But yes, absolutely. I love this. It's just another thing to add to the arsenal. And, it's a big stepping stone for us, our first crypto class. I'm glad it was you, Burt. You did absolutely freaking amazing. I'm so grateful for you. I appreciate you. Congratulations, Sneh. You won. So I will get the announcement for that, and I will get the medal next to your name. Does anybody have any last questions, or did you have anything last to say, Burt?
Well, I would love to take questions if you want. But I do have one thing to share with you guys. I've got this form here. That is the form. It's at the end of the presentation too. I posted that kind of up in the class sessions chat also. So if you want to look at the presentation, it's there. But this compensated feedback form, even if you don't want to do the compensated feedback, there's a question at the very, very end. What else would you like to hear from me in terms of a class? So if you just want to if you're I don't really care about the compensated feedback, but I really want to hear a class on, I don't know, some kind of deep dive into derivatives or something like this. I would be happy to come back and do this again in a little more of a deep dive product. Oh, ARBs. ARBs is a good one. Holly Folly says ARBs. Yeah, if you want a deep dive arbitrage class, that would be really awesome to do. So I put that there so that people can request stuff, and I'm happy to do another one of these classes since this was kind of a broad general overview. The deep dives are really where it's at, but you can't really do a deep dive if you don't know how to get money on. So I'm glad we could do this kind of intro session.
I posted a link right there. It says class PowerPoint. So if you are okay with that, I would love for you to post your presentation there. We house all of our presentations we have for classes there.
Yeah, absolutely. Excuse me. Coughed into the microphone there for you guys. Kind of a surprising one. I've been a little sick lately, so glad I'm feeling a little better today. And then Crowned Light. Do I trade on Coinbase? No, I actually don't. I used to, though. Coinbase Pro used to be really good. Coinbase Pro used to be 0 fee, actually. It was pretty incredible. So you could deposit money and you could actually get spot crypto with absolutely no fees. It was really amazing. But over time, I actually had a disagreement with them. They took $30 from me and they didn't give it back, so I stopped using them forever. And honestly, a lot of my onboarding and on-ramping and off-ramping, there's some pretty interesting ways you can get money into crypto if you really want. So I'm over on the precious metals for sale Reddit, and I will actually buy and sell precious metals on Reddit for crypto in order to move money in and out of wallets. And so it's a little bit of a deep dive thing, but yeah, I don't really use Coinbase anymore because I don't use any centralized exchanges at all. That was the last one I really used. I do use MEXC for crypto to crypto transfers, but none for onboarding USD anymore. I do it all kind of by the skin of my teeth, by my bootstraps, whatever. Let's see, and Marco, if you wanted to give, I think Sneh won that, so if you wanted to hand out a Quenta to Sneh, Sneh, if you want to either DM, Marco is the guy named Collateral /Quenta, or if you want to DM him an address or DM me an address, we'll send out a Quenta to you as a prize for that, because Marco said he would give us free stuff. So yeah, that's why I invited him here to give away free things.
Very nice. And so you were talking about the link for people to fill out other information that they may want to know. And then you said also about, does it have the link for the other thing? You said y'all were choosing some people from the server to participate.
Oh yeah, that's all. I put that all in one. I put that all in one form.
Perfect.
Yeah, I usually have like a much longer, kind of nicer type form for things like this, but given that I was sick, I just threw something together and was like, you know what, I'll just, there's enough information to pick people. So yeah, if you want, you can
No, it's perfect.
Yeah, it's a basic like, what's your experience with crypto? What's your experience with TradFi? So we basically just want to know, like, okay, have you ever used crypto before? And if not, that's actually totally fine. We want actually perspectives from people who don't use crypto at all. That would be absolutely ideal, because we want to see what people's first experience with this stuff is like. And then your trading experience just kind of tells us, like, okay, when you get in there, if you haven't used crypto, like, are you going to know what all this stuff means? Or are you just like completely new to everything? It takes all types, so don't think that either of those questions, like if you don't have a great answer for them, if you're like, I've never used crypto, I've never traded before, I just discovered the Mentality of Money server yesterday, that's actually fine. So we're just trying to get some different perspectives, because the idea here is you guys are very valuable to me as people who trade and people who use things like this, and so we're trying to provide a little value to you for your perspective, and that's really what it's all about. So yeah, that's in that type form.
Sorry, go ahead.
That's in that Google form, and the same one as what do you want me to come back and teach in a future class.
Okay, so y'all make sure and go and fill it out. Give them feedback for the class, and you also get an opportunity to get some free crypto. It's great when they want to do marketing research and people get free stuff out of it. And Mentality Money was one of the ones chosen to get it. Not every server's getting this. I think y'all only doing it with a limited amount of people, and some are going to be chosen from us. So y'all definitely take advantage of that.
Yeah, no, it's not just one of the only servers. You guys are the only people, other than a few hand-picked people from our own community, that I decided to get in on this. So.
Oh yeah!
I just like you guys.
Oh, we like you too. I knew from the first time I heard you talk on Twitter. I was like, oh, I like him.
Well, I hope everybody enjoyed this. I had a great time doing it. And it, we spent a couple hours here, so it was certainly not short. But you know what? I'm glad we actually kind of got through. I was like, I'm putting way too much stuff in this PowerPoint. Like, I'm gonna have to gloss through so much of this, because I know, like, sometimes when you take in a lot of information at once, it can become a little bit meaningless over time. But hopefully we managed to strike a good balance where it's like, okay, there's some useful information in here, but it wasn't completely overwhelming.
No, I think you did amazing, and I think you're gonna spark something in the server and some interest. So I'm really, really happy. I think you did great. I'm super grateful to you.
That was great. Yeah, lots to take away from that presentation, and nice, high quality work.
Awesome. Well, that is great feedback to hear, and yeah, look forward to doing it again sometime. We'll talk to you guys very soon.
All right. Y'all have a great rest of your Sunday. We will see y'all tomorrow at Market Open. Don't forget to follow the link and answer those questions. Thank you again, Burt. You're awesome. And enjoy the rest of your Sunday. We'll talk to you later. Bye. And congratulations again, Sneh.
Bye, guys.
Bye.